What's up, everybody? We got to talk about this market crash. What's going on? Why did it happen? Is it just a trap before it just rockets back to the upside? Are we going to have further downside? All that and more in here in just a moment. I want everybody to drop a 1 in chat. If you are in here early, drop a 2 in chat. If you are sitting on your hands, drop a 3 in chat if you're trading this volatility. Let's get this engagement up in this live chat. Let's see what's going on. Hope you're all feeling good. Hope you're all feeling grateful. But this market is giving us opportunity right now, and sometimes that opportunity is just to be patient. Sometimes it's trade the volatility. Depends on what your strategy is. We're going to talk about all this, Bitcoin, Ethereum, altcoins, and more here in just a moment. So everybody hit that like button, hit that subscribe button, and ding the bell. We're about to dive into this right now. What's up, everybody? Good morning, good afternoon, good night. I don't have my light on, apparently. Let me turn that. There we go. Get that up light going so you can see my face. Hope everybody's doing well. We got to talk about this price action. That's not the page I wanted to share. Hold on 1 second. I don't know why it's showing that page. Give me 1 second. Where is charts? Right here. Boom. Live streaming. Boom. Right. That's not the Bitcoin 66,000. There we go. Boom. There it is. This is a price action we have to look at. I don't know. There's a little glitch in the matrix there. But what we're talking about is this right here. Price action breaking down. Was it telegraphed? The charts were telling us there was a likelihood of this price action moving to the downside for a number of reasons. And not only are we seeing this right now, if you are following me on my Twitter, I've been talking about this since June. This is June 11th right here. Actually, June 5th right here. This is where I was talking about specifically that we were having a lot of open interest rising. We know it was mostly long because we have this positive premium. And then I was basically talking about a potential reset to the downside to clear out, flush out some of this open interest. This was very high. All the liquidation levels. I mean, see how high this got? We had a positive delta. And then on the next day, I also talked to, actually a couple days later, this was June 7th. I talked about this rising wedge that was forming, and it was looking like we were getting a little weakness coming into a known level, that broader, that larger bit of resistance that was overhead, which is this resistance right here. This is that level. Here's a rising wedge coming into this level. Yes, we got a breakout, but it couldn't even facilitate breaking past this previous range high. This was telling us, telegraphing weakness in this moment. And as the price came down, not only did we break below this rising level of support, we basically flipped it to resistance immediately and just rode up until we started to break down. And so we've been talking about this. I've been sharing this with you. I've been talking about the level below us, 64 up until about 65, a little under $66,000. So we have been aware of this. The chart has been telling us this. Are we getting ourselves caught in emotional traps because we're not looking at the data and we want it to go up? You have to ask yourself that. The market was telling us what it wanted to do, and some of us listened, some of us got caught in those emotional traps. So let's not allow ourselves to get caught in this, because I said right here, for those that follow me, I outlined the likelihood of Bitcoin pulling back a few days ago. Health check, reset, nothing to panic over here right now. So let's continue on with this. We got a lot of stuff to cover today. So with everybody right now, hit that like button, hit that subscribe button, and ding the bell. Let's dive into it. I also want to talk about right here, Mike Alfred. Great point here. He says, by now, many of you know that hedge funds have been on a massive long spot, meaning buying the one-for-one crypto, non-leveraged spot longs, but also short on futures. Basically, it's a Bitcoin carry trade trying to pick up pennies in front of you. They're playing the arbitrage both directions. They're taking a long position, but they're hedging themselves with a short position on futures. But because of this, there's about $30 billion of short positions to liquidate if we get up to that $72,000. As you all know, Joshua Jake here on the Hit Network, Discover Crypto, has been talking about this level for some time. And it's not just him. We're seeing other powerhouses in the space that really understand what's going on in this market talking about this level. It's something we need to pay attention to. This does not mean price is going to go straight there. It's suggesting that there's an opportunity for that spread to manifest itself and for price action to come down and trap people. And then on that liquidation window, let's come back over to it right here. Where are we at? Looking at this liquidation, looking at, I mean, we 67s, we already have this heat right up in here. But if we zoom down and look at the actual liquidation levels right here, we can see that there's a huge spread from the downside. Look how deep this has gotten down here. The windshield wiper method, this has come all the way back down. We don't have much below us, but we have all this liquidity above us if the price action starts moving to the upside. So as Mike Alfred said, as Joshua Jake said, as I've been talking about, we talked about the spread to the downside. Now, you know, and basically the open interest that was ticking up, not only the open interest ticking up, but the positive premium that we outlined back on June 5th. Talking about the setup for a move to the downside. This was giving us that hint. Everybody's going long with these two things going up in an increasing fashion, providing an immense amount of liquidity and incentive for market makers to move the price in the opposite direction. So what do we do with it? Where are we at right now? Now we see the price action starting to trickle down. And what do we also see? The positive premium, which when this is going up, this means more and more people are going long because it becomes more expensive to go long. But what do we see? This is now starting to trickle down, but open interest is going up. What does this mean? What signal can we derive from this? If open interest is going up, but the positive premium is now flipped, it's kind of going, you just saw it was red. It's going back and forth from green to red because there's a lot of shorts that are opening up now, providing the same impulse or incentive to basically move the price down. The same thing is setting up to now move the price back to the upside. So we're going to want to pay attention to this as we're moving forward. This is on velodata.app. Free website, by the way. All you have to do is set up an account. I'm not an affiliate. I'm none of that. This is just a great tool to utilize. When this is up and increasing like we saw here as price was pushing up, while open interest is going up, it means everybody's going long. The market cannot sustain itself if everybody is going leveraged long. There's no way those exchanges could actually pay those profits. If everybody's long on leverage, you create mass insolvency. So what this also means is that it incentivizes short positions, but also incentivizes market makers and large smart money accounts to say, oh man, there's a large liquidity pool. If everybody's going long, then we get a lot of short liquidations that are directly below us. And so when we look at this on the, let's go to liquidation heat map, we can see this playing out in real time. If we zoom in on this right here, as this pushes up, this gets hotter and hotter and hotter because there's a liquidation point. So there's incentive of liquidity pool directly below us. And so if the price action, if they can create that domino effect of selling pressure, you slice right through that and scoop up all that free liquidity because you force close these longs, and a forced closure of a long is selling. It's forced selling in the market. So then what do we get? Then it moves down and actually starts clearing out all of this liquidity here now as well. So we've got a little bit of this chop in this zone. So we're going to have to pay attention to what is going on here. But remember, look at this. 1, 2, 3, 4, 5, 6, 7, 8 different instances in 2016, 2017 of 25% or more, 26% or more, up to 40% moves to the downside on the way up. And what are we at right now on this move? This is from this breakdown, it's roughly about 5%. Look at that, 5% move. If we go from this zone right here, then this is only about 6-7% move to the downside. And we're worried. We're worried when this has been the normal course of action throughout this entire bull run, the entire market cycles preceding this one. Now, this cycle, we've had about 5, I believe, if I'm not mistaken. Let's go ahead and double check on here. We've had, let's say 1, 2, 3, 4, 5 moves that were all roughly about 20%. There we go, 20%, 20%, 20%. About 20%. What do we got? Another about 21, 22. So it's been about 19 to 23%. 1, 2, 3, 4, 5 times. And right now we're having a little bit of a move. And in reality, if we look at this without any lines drawn, what do we really see? We just see sideways price action consolidating where at the previous range highs, the previous all-time highs. Yes, we deviated above it, deviated below it, and now we're still within the same region. Nothing has changed. We have big economic news and fear around that with a lot more institutional players in the space that we've ever had that are going to trade this like any other risk asset, although I would argue this is the least risky asset in the history of the world. Now look at this. We're at 6,666. We're in that 66,000 range. And when we look at this, we've been talking about this zone, down here. Now, why did I say 65,241? Well, let's get down to the 12-hour, and you can see it a little bit clearer. For whatever reason, this is going a little bit slower than I want. There we go. We see, look at this, a bounce here, rejection right under it, rejection, a little bit of support, and then little rejection, then bounce, rejection, 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 support. So this is just essentially, we can come and draw a little bit of a box if we want, but I just did a line because I was doing it quickly. But we're looking at this region here. If we drag this up a little bit, it's up there at 60, 65, 547, so on and so forth. This region is where I'm looking at a potential dip, maybe even a wick down into. If we lose this, then we'll look to that next range to the downside, which would be down here at about $61,000. I'm looking at all of this support right here. This is where I'd be looking for the next leg down if that were to happen. But remember, there's so much bullishness. We are still, let's actually move to this one right here. We're still sitting above key levels. If we really look at this, the short-term holder cost basis is at 67,000. We are under that, but we had a deviation slightly below right here. We had another somewhat larger deviation below right in here. But we've seen in previous cycles how much this bounces on this sort of value band range of this 21-week moving average, a 200-day moving average, and the short-term holder cost basis. Now, on a very simple level, let's just look at traditional indicator, 200-day moving average. This is all the way at $56,000. So if we're looking at this on a traditional basis, because remember, institutions and smart money that have come from the traditional finance world, they're not looking at the short-term holder cost basis. We may get a little bit of a variety in how the data operates moving forward. But if we look at this on a traditional analysis mechanism, the 200-day moving average, this is ultimately still incredibly bullish so long as we, hold regionally above this. And this is all the way at $56,000. So a move down to there would still mean that we have incredibly bullish footing. Remember that as we move forward. So why are things pulling back? Well, we did get a little bit of some sell pressure on everybody except for BlackRock and Bitwise here. See, plus plus 91, minus 564, minus 43, plus 109, with the delta, the total being minus 934 Bitcoin after many days of positive flows. But is that it? Is that why the market's going down? Well, let's remember the bullishness, and then we're going to talk about some bearishness, and we're going to talk about the levels as well. Here we go. Mike Alfred says, rich people, MicroStrategy, Similar, Square, Metaplanet, DeFi, El Salvador, Tether, BlackRock, Fidelity, ARK, and Bitwise are all buying Bitcoin. But sure, go ahead and sell all your Bitcoin, all your corn, because Bitcoin fell 3% before a Fed meeting. We have that big economic Fed meeting that is tomorrow. It gives us some information, so it gives us a data point that a lot of people hedge themselves. They take some profits in case it's a very bad data point, very, very bad talking points from Jerome Powell and the Fed. Bad CPI numbers. Some people front run this out of fear. Other people just use that because they know some people will be fearful, so they create that cascading momentum. So when we talk about this, we still have bullishness though, because with the number of new capital channels, the number of institutions scrambling to acquire Bitcoin, the known level, the previous all-time high range that we're in right now, and nation states proactively stepping into the Bitcoin arena, and some people are scared right now. We need to balance the data point that feels scary by understanding the broader context of how bullish this market is right now. We have to remember that. So let's go ahead and talk about it. Spot selling started this morning, primarily coming from Binance, over $200 million. Bitcoin tends to dump into the FOMC, the Federal Open Market Committee or Commission, whatever it is, and the CPI. Market overreacts which should reverse after events. Open interest is now at an 18-month high. That's what I was speaking about in that first chart. Coupled with 10% funding rates, potential for short squeeze. The lowest price I will entertain is 63,400. Here says James Van Stratton. So let's go on to this. Oh, there's another one right here. Want to look at this. This is that chart showing here from Gumshoe the moves down into the FOMCs and then the rebounds. Move down into the FOMC, rebound, move down into the FOMC. Do you think we'll get a rebound or break down? I'm leaning towards, more likely than not, having this as a washout, that bear trap, and then that resolution to the upside. Now, how could you say that, Kelly? Like, it's so scary. I look at the data. I look at this right here, and I come up here, turn on max liquidity, just so we get a better reading here. And we can see that we're at a minus, what does this say? Let's get our mouse over it. A minus, it's like minus 20 something. I can't really get my mouse on it, but it's minus 18. Let's call it minus 18, minus 20 right now. $1 billion. And this is moved all the way from the top, flushing liquidity all the way down to where we're at right now, not much below us. This indicates to me, what did I have on my chart? I had that 65,241. Let's just call it 66,000, right? Because these are all numbers. It's never going to be exact regionally in that zone. And we see that the next leg to the downside, there is some liquidity that could still get flushed out, taking that before it moves up. But at some point in the near future, this is indicating there's a likelihood of a strong, aggressive move to the upside. Now, where would that be? Well, this is $66,000. 65 is roughly right in here. So this is 65,000, 65. So yeah, so we're getting in that 65.8, 65.6, 65.4, where this liquidity is. And it's exactly where we had this marked out before this data was there. I was looking at price levels, and now the liquidation zones, the areas of liquidity on price action are agreeing with this. And this has to do a lot with where previous price action levels were. So we've got a lot of things stacking into our favor right now on data if we pay attention to the data. Now we can see also there's a little bit of minor capitulation, undergoing a rare minor capitulation. This one is from the halving event. Remember, we just had the halving April 19th. Basically culling weak miners. They're less profitable now. The miners' profitability depends on those rewards for the most part. The rewards that they get previously was 6.25. Now it's 3.125 Bitcoin per block mined. So when you see a downtrend in price action, there becomes a squeeze on their profit margins, and ones that are not fully set up and budgeted for that have to basically either get acquired by other businesses, or they have to dump Bitcoin to facilitate their profit margins. And we can tell this by looking here at the hash ribbons. The hash ribbons give you a good idea about how many miners are online, how many are turning off, how many, etc. And we're seeing these pinches here. Each time we've had a pinch, look, down, pinch here. We had to basically move up into it and then down. And then we had a pinch here that happened just after the FTX collapse. But then what happened right after it? Boom, up to the upside. So I'm not worried about this. This is par for the course. We just had the halving. Everybody thinks everything is already fully satisfied because it happened. No, these things take time to manifest. You know, it's kind of like if you lose a job, you may still have some money in savings that you start spending without appropriately accounting and budgeting it. And then all of a sudden you realize that savings is starting to dwindle. So then after a month or two, then you cut back your lifestyle. Then you have to cut back your spending, etc. So things take some time to matriculate into the charts. So this is not an end of the world thing. It just gives you a little bit of an idea, some of that sell pressure that's coming into the market. And sometimes these big market participants like miners look at the data and are aware, man, this is set up for a potential move to the downside. As you see this moving up, open interest, okay, let's squeeze this out and we can take some profits because there's going to be liquidity to satisfy those orders, etc. Now, where were we at? But then we also look at this. Bitcoin loves to rebound after every FOMC meeting. We can see this again, up, up, up. This is 18%, 25%, 15%. And we're coming into that date tomorrow. And remember, the ECB, European Central Bank, as well as Canada, has already cut rates. I don't necessarily think Jerome's going to cut rates, but I do think it's going to be prescient for him to, even if he says we're not cutting rates, to then give like a nugget of positivity. Remember, we're in an election cycle year. They don't want the economy to be in the complete toilet going into that. That would be bad on the current administration. So I do think there's going to be some sort of dovish talk. There's going to be something there that's going to buoy the markets. But either way, regardless of all this broader economic context, we are still in a very strong bullish trend. And if we do see dips, even beyond where we're at now, remember that's opportunity. And we can also see right here, the 4-hour RSI bombed and longs destroyed. Will it run it back in the coming days? What I'm looking at here is this RSI coming down. Boom. This is we see this coming down. And what do we see? Up. Come all the way down here. Up. Come all the way down here. Up. Almost all the way down here, but we have bullish divergence. Up. And then again, look how deep we are. We're almost as deep as we were back here when price was back at about, look at that. It looks like about $50,000. This is feeling good. The setup is there. If we're aware of the data, rather than being hostage by our emotions. So what are we going to do about it? Well, first thing we're going to do about it is remember that, look at that. Now we're getting that negative premium, which means a lot of people are going short. The negative premium, remember, you have a positive premium, which charges longs an interest rate for the loan that they're taking for the leverage that they're, like say they're doing a 10x leverage trade. You have to pay on that every eight hours. Now, if everybody's going short, then you get a negative premium and it charges you to hold a short. So this is a great way to see how much of the market is going long or short. So this is very good to see in my perspective about what's setting up. Now, it doesn't mean it's going to go negative and then immediately we pop up, because look at this. We had quite a bit of a move here, but during this entire time, we formed a giant inverted head and shoulders with an inverted head and shoulders within it. So there might be a little bit of patience you have to take, but remember, everybody, on April 19th, I shared with you a chart showing the different, I can actually pull it up. I'm not going to show the chart that I tweeted, but I'm going to pull it up right here, halving cycle. When we look at this, let's go to, where's it at? Halving cycle right here. Remember, there is all this time period right here where there's a lot. This is a halving, and this is, you see where we're at right now. See how all these lined up at the halving? Price action sideways from anywhere from 40 to 160 days. Nothing's broken right now because it's not just mooning. Remember, this is a larger ship because of how much liquidity, how large the market cap is of Bitcoin. And even if you're holding alts and you could care less about Bitcoin, you have to be aware of this, because this is going to be the risk driver for the majority of the rest of the crypto market. Now, meme coins seem to be in their own sort of narrative now, and they pump, they dump. I mean, even Duke, Shubaduki that Joshua launched, I mean, this is, even up over back around 10 million market cap only in a couple weeks, just making runs to the upside. And you'll see this on a lot of different meme coins right now. But when we're looking at the broader market and crypto, we can come here to total 3, and we can see on this was also, I brought this up last week, total 3, rising wedge. What do rising wedges tend to do? Break to the downside. This doesn't mean that the bull market is over. This means that in this move, there's a little bit of a health check that needs to happen. And look where it's at right now. Currently, it's holding right here at this previous sort of low that is right in here. Let's go to zoom in a little bit. See, this is coming right into this zone right now. There's a potential that this could bounce here and then move up. If this does lose this zone, then I'm looking for the next zone down. Now, I'm not looking at this to trade a particular price point. This is telling me what direction in general the altcoin is. Risk coming into altcoins, or is it coming out of altcoins? AKA, is money being moved into buy, or are people taking some profits or rotating out, whether it's into Bitcoin or into stable coins? And you see this moving to the downside. VWAP, angle to the downside. All this red on the dashboard here on the BitLab Trim Fuel. So the signals have been there if we were paying attention. But we also know where we're at in this bull market. We understand that that we're coming up into this zone right here. We understand that we have this rising level of support. You can call it just that, or you can call it the rising wedge as we discussed. But this is moving to the downside. If we lose this, and I'm looking to coming down here into this sort of $63,000, $64,000 range, if we're not held by this zone that I don't know why my computer's going so slow. I did buy a new computer. It is coming on June 22nd or something like that. I think we're gonna have a lot less problems. And I have a whole redesign of the BitLab scenes and all this kind of stuff. I got to get with one of my buddies to figure one more technical thing out on that, but we're gonna be rolling that out later this week. But look at this, large move up, M formation, and we have the rising wedge broke down. It seems a little bit more obvious now looking hindsight, right? But I've been outlining this for you all for the last couple weeks. We still have positive money flow. We have a lot of selling pressure in here. We see on the momentum wave here on the BitLab trend fuel. Let's see. Let me tune in. Got Candle Daddy here. Alexander G, Theo Rodriguez, Nicole Manus Tater. Got to meet her and Candle Daddy last week here at the Hit Networks facilities. Shout out to that crew. How many of you guys are going to Bitcoin Nashville, the Bitcoin conference? Let me know. Type in Nashville if you're going to Bitcoin Nashville. I'd love to organize a meetup, hangout, dinner, something. We're going to have a whole facility, like boutique hotel type thing that we're renting out. We're going to be doing gatherings. We're going to be doing a lot of media content, a couple cocktail lounge parties, etc. Let me know if you're going to Bitcoin Nashville. I'd love to meet up with you guys if you are. All right, Warrior also. Shout out, Warrior. How you doing, my friend? So this is what we're seeing, but it's not just Bitcoin, right? We got Ethereum also. I mean, look at this. I did not change this. We had this right here about a potential move, maybe further up, but then that moved to the downside. This came down, bounced right on our box. It bounced right on our box. Now it's lost this. We had another one. I deleted it a few days ago, but it was this zone right in here. See all these lows and all these highs? You take this over like this, and we're looking at something down in the $3,200 range, 32, maybe a little higher, 33, as a potential continuation down into this zone. Now, if we take a Fibonacci, option F to the top there, let's go just like that. We can see that this came down roughly about the 382. The next level down would be a little bit above. This is a golden pocket right here at 33.84. This would be wonderful for the bulls if we can hold above this. But it doesn't seem like there's a lot of price action that agrees directly with that level other than right in this little bounce right here. If we do lose this, though I am looking at this 786, and I feel like this 786 is probably more likely than this golden pocket, which is right here. Again, if you want to measure that, you come over here to the top left corner of your screen, 1, 2, third tool down, hit this little arrow, click on fib retracement, or just click on your chart. If you're on Mac, press Option F. If you're on PC, Alt F, and then click once, move your mouse, click twice. That's how you can set up your Fibonacci. So again, Option F, go from this level right here, pull it to the top. Those candles, that's how we're seeing it. Now we can also get another one just to see if there's a better. Now look at that, the full move. You got to experiment with your tools and see where you find the most confluence. So from this low to the high, look at this, comes down, kind of the bounces quite a bit above the 382, but now look at where the golden pocket is, perfectly in this box that we threw on the chart that is outlining a bounce, rejection, rejection, rejection. So this is telling us that this is a level we have to pay attention to, and there's a golden pocket of this full move right in here. So this is more officially, this is option. Here we go. This is more, this is where I think we're going, down here into the 3250 sort of zone. Now, if we lose that, remember, Ethan Smith called it out a week ago, maybe earlier, it was last week. This giant Ethereum broadening wedge that we have coming potentially, if this is the case, we could potentially be coming all the way. Let me see. Is this crooked as can be? Well, I don't know what happened there. Everything got moved. Everything got moved. There we go. So this actually looks even better now. Why? Now that this is finding those bounce zones, because now look, the golden pocket with it and the horizontal levels and a rising diagonal trend line all comes right into this 3200, 32 to 3,300 zones. Shout out Ethan Smith for calling that out. But yeah, I mean, and we had this, I talked about this also, although, and I said it last week, although this looks a bit like a bull pennant, it also looks like a Bart Simpson pattern that potentially could fall back down and clear all of the, like this was just such a quick move. There needs to be some price exploration in it, meaning where are the buyers going to come in? Coming right here would be wonderful because it also would still be a higher low. So this is one of, if you guys like this type of analysis, if you guys like these tools, these resources, do me a favor, show some love, hit the like button, look down below this video. If it doesn't say subscribed, hit that subscribe button. Join us here in the BitLab family. Let's see right now where we at on subscribers. We're just about to hit 500 or 50,000, not 500, 50,000. We're at 49,700. So everybody hit that subscribe button. If you're not subscribed, you will be part of basically being here before we were at 50K. Big love to each and every one of you. Let's get back into these charts because we're also seeing a very interesting thing on Binance, on BNB. I do not know what the hell is taking so long on the internet. Come on, baby. Everybody, give it good juju. I don't know what's going on. Give it good juju. Give it good juju. I'm going to delete some stuff here. Maybe it's too many tabs open. I don't know. Come on. You can do it, baby. I believe in you. I believe in you. There, now coming back over to BNB. There we go. Now, this is interesting on BNB. What do we see? We saw that large bull flag, breakout, bull flag. We had the breakout, but we have something different. We have something different here than we did here in that we had the breakout and the price action is actually coming back to test currently. If we can actually, if the market sort of holds up where it's at here and holds this and then bounces, this actually is a very bullish sign. But I think, as we talk about on here all the time with how contentious this market is right now, there's a strong possibility of that basically move up, move down. Everybody wants to buy this for it to go back up, but then it whipsaws to the downside, comes back, and then you have that continuation. What that would look like is a price action losing this here, somewhere down into basically roughly about this level here, then bouncing, rejecting, coming up, finding support, and then launching to the upside. This would be actually very bullish because it would clear out a lot of people that are just going leverage in every position. Excuse me. A Gesundheit. But look at all of this red down here on the dashboard. Does not bode well for the near-term bulls. Now, this is on the 3-day chart. What does it look like on the 4-hour chart? Let's get in a little bit. And look, do you notice something? See these random lines that are on here? It's not random. This was a measured move from this right here, and this price action almost basically fulfilled that target and then came back. And this also is an exemplification why you don't set your, if you're trading small time frames, why you don't set your take profit at the edge of that target. Because you see this kind of front ran it just a little bit. It was a little short of it. Take that into account when you're setting your price targets. Now, if this does break to the downside, the level I'm watching immediately, if this does go down, is essentially, I would say, right about in here. Now, why? That's just a random box through price action, because if we look at it, we had an oscillation above, but we had support right here. We also had support right here, and then we chopped right in the middle of the zone. This also bounced on this zone, chopped right in the middle of it, bounced on top of it, chopped right in the middle of it, chopped right in the middle of it. Now we go below it, but we're chopping within it and bounce on top of this again. So this is telling me if we come down to this level and lose it, 557, then we're looking at the next level down, which would be down here about $497, $500. Now, it doesn't feel like a big move, but these type of moves shake so many people out. That's another 7%, 8.5% move to the downside. If it loses that, that's that's not a small move, 17%. So let's mind our manners right now and be a little bit patient with what we're doing in this market. What is Solana doing? Solana, look at this, falling wedge, did break positive, but then immediately reversed back to the downside. Now, they just removed a couple validators and stuff because they were basically doing sandwich attacks, so that might be a little bit of FUD there. But it's also, you can see it across the entire crypto market having these pullbacks. So if this, I would look for a target down here at 143, which you can see rejection, bounce, rejection and a bounce, rejection, bounce, bounce, bounce. So right in the zone, let's actually just do it right over here. Boom. Option J. That is the zone. 140 is where I'm looking for this potentially to come down to. And if this is lost, we may be coming down a little bit deeper somewhere in this region down here. But let's look at this 140 first and see what's going on with the broader market over the next 2 days. Because remember, there's a lot of volatility. We just saw it in these charts. We just saw it in the coming into the FOMC, the sell-off and then launch. We just saw it also on this chart right here, the sell-off and then launch, the sell-off and then launch, 10% sell-off and then launch. So this is a known thing in the markets, volatility leading into an economic event. So let's not lose our minds because the price action is doing what it's done repeatedly over the last, very many months. Now we look at Cardano. We had this area drawn, this price was up over here the other day, and we drew this level based on all these bounce zones. And let's look at the price action. Cardano, and remember they had the Voltaire update, Chang update or whatever it is. Whenever all those validators or node operators, staking pool operators, I should say, SPOs, 70% update their systems, and that comes out. But so that's a positive thing on a fundamental basis. But the market as a whole is going down. But we're seeing this hold right in here. The bigger problem I was seeing was this consolidation into weaker and weaker and weaker bulls. This is exemplified by descending level of resistance. The bears bring it down. The bulls push up this far, and then it's a weaker push by bulls, and then it's a weaker push by bulls, indicating that the bears potentially may be gaining strength on this asset. Now, if this area is lost, and look at this, we had this other level drawn, and look, the price came right down to it. If this level's lost, then I'm looking at the price actually falling a bit further down. Come here, damn it. There we go. A bit further down, and this is why we had this level here, but I'd be looking at somewhere down here in the 37 cent, 38 cent sort of range right here if this level's lost. But remember, I'd be patient right now between now and the end of tomorrow afternoon, like into Thursday really, because there's going to be volatility into that event, around that event, and then a reaction after the event. The FOMC data, the decision, the CPI data, all that. The CPI data is going to come out. There's going to be volatility around it. Then there's going to be a tone shift based on the way Jerome Powell talks about it tomorrow afternoon. And then there's going to be a reaction to how the reactions to the tone shift was. So this is, for me, unless you're a professional trader and you know how to hedge yourself, I would be patient between now and tomorrow. And look, if we do get dips, I'd be looking for buying opportunities. Avalanche. Riding on the edge of a cliff right here, actually breaking through a little bit. We got a little bit of wicks in here, but I would actually draw this down a little bit like this now because we have this wick, and we can see, we can actually do two. Now we'll just leave it like that. Look at that, slice through. The bulls are trying to keep it above the zone. If Avalanche loses this area, then I'm looking at a price level down here at $23. Why? Because we got rejection, rejection, rejection. And again, it's going to be regional, $22 to $25. Somewhere in this region, I think will be a great opportunity if price does lose this level. Now, we have a little bit of a stair step between there, which is this $27 zone, because we have this bounce. And if you see this, take this across, we have a rejection here and a bounce here. So this would be the bullish pullback, and this would be a great dip buying pullback if this comes back here. So in this case, what am I saying? That means you have an opportunity to potentially split up entries. If you want to have an allocation into buying this dip on Avalanche, you can set it up with a dip buy somewhere in this region and another one a bit deeper down in here. And you get the average of those two, which puts your price somewhere here in the $25, $26 range. But this is looking bearish. Look at all that bearishness. Woo. 4-hour chart. Let's look. Let's see. Let's look at some other data. Bearish signals, but look at the bulls are trying with these divergences, but we are getting a little bit of a reversal signal potentially right here. And we saw the last time that happened with bullish divergence. Boom, we had a big move. 3 bullish divergences and a reverse symbol, but there's just pressure on the market right now. VWAP down here rolled over. The stochastics rolled over. The RSI is looking like it's trying to maintain where it's at, but it's all waiting on what to, I mean, again, it's a waiting game through till tomorrow. If we come down to Aerodrome, and I want to shout out to Ethan Smith. Let me find him. Oh, you know what? Ethan Smith shared these last week, here in our BitLab Discord, talking about the, potential, the TA breakdown that he had. And it's beautiful. Very simple line to the downside. Once we broke it up, very simple support line to the upside. And we also had, look at this, 3 rounding tops here with not really an increase in momentum. And then we had a couple bearish divergences right there. And the price went through the BitLab trading stack, the BitLab Intelligence trend signal line, the weekly VWAP, and it's started this pattern to the downside. This is when it was at $1.09. Where are we at now? Down at 87 cents. So this is that line that he had right here. We lost it. We went through the trend signal line and the weekly VWAP. We also had 3 bearish divergences, and then this boom sent down, rejection, rejection, and now this is just accelerated to the downside. But we are right here at a level which is a previous range low right there. So what does this mean? I think there's a big opportunity for a market reversal that really shocks people, but you need to be aware that we may reverse between today and tomorrow, where we come up something like this and then continue to the downside. Right now, as I said, I think it's a sit on your hands type of opportunity in this market. By the way, when you are trading, when you are buying, when you are holding these things, I just want to shout out our channel sponsor. We are powered by Arculus. Make sure you head over to getarculus.com. It's the best cold storage. My favorite cold storage, crypto cold storage wallet out there. You have 3-factor authentication. It's backed by the Compost Secure guys that basically designed this technology that you have in all your credit cards. And it's all independent and directly within your ecosystem. It's not data sharing that they have. This is your crypto stored in the most secure way out there. Make sure you check them out, getarculus.com, and use code LAB10. That's lab10 for 10% off. So shout out to them and for being our channel sponsor and also making an incredible product. If Aerodrome does make a move to the downside, where am I looking? I'm looking right here, back down about 69 cents. Why is that? I'm looking at this reversal here and these bounces right in here. So I'm basically going to draw in the zone. This is the area I'm looking at. If this area is lost, potential washout to the downside. Now, remember, everybody was so excited about this when it was up here at 230. Some people felt like they missed the boat. Well, then if you felt like you missed the boat on an asset that you believe in and you see the opportunity matriculating, melting down into those zones, use your data, not your emotional hope or fear. So we got to remember that. Near, let's look at near. Near bleeding through a zone that we have marked out, but it came and hit, look at this, bounced on it, came down, went down below, but then bounced on it. Losing this, next level down I'm looking at is 565. We have this chop zone here, kind of a rejection, kind of a bounce, rejection, rejection, bounce. So this is the zone I'm watching, 568 to 575 zone right in there. We could put a target, boom, right there. Let's go make it a little bit tighter. There we go. That's the level I'm watching. And look at this. We had a rising wedge. Came down, rejected, rejected, down. So the market is not doing stuff that's completely out of context. The market is providing us data. It's letting us know through the way these patterns and shapes are in price action on the chart. And when we pay attention to that, and when we understand that open interest was getting a little bit hot, and not only open interest, but leveraged longs were getting hot into this, that set up the opportunity for the move down. Now, we have that leveraged longs have now balanced out back to zero. So this means you're having about a pretty equal long and short ratio, or at least this has subsided for the time being to bring down that expensive long position. And we want to see this open interest sort of flatten out and hopefully move down a little bit. The market doesn't like making huge moves to the upside when everybody is betting on that direction. So let's all do our part in this market and be a little bit more spot buying friendly and have a little bit longer term mindset. We will all do ourselves a favor in releasing the Kraken to send this price higher, to send these prices higher. So with that being said, that's all I got for today, everybody. I love you. Everybody hit the like button, hit the subscribe button, ding the bell. And I'd love it if you guys would, if you want to become a member on this BitLab YouTube channel, become a member. We'll be doing a bunch more member streams this week that all of you BitLab YouTube members get access to. And then for all of you, if you want to go deeper, if you want to go through our courses, if you want to get in our Discord, where we are sharing so much information in here on a daily basis with VIP charts and breakdowns of stock market and crypto setups. I mean, it's just nonstop with how much stuff that we have in here. You can actually even do chart requests. We do private member streams. I share what's going on in my portfolio and what moves I'm making. And also, I mean, there's so much that we got going on here. Head over to lab.bitlabacademy.com/Kelly. The link is pinned in the top of the live comments right there. Lab.bitlabacademy.com/Kelly. Get in there. You get 15 days free, and then it's a reduced price for the life of your account there. I love you guys. I appreciate you guys. Everybody hit that like button, hit that subscribe button, and ding the bell. We got to sing it. Adios, muchachos. Thank you for coming. Thank you for always tuning in. BitLabAcademy.com. Hit that like button, sucker.